Hello everyone, this is Amit here, and I'm going to walk you through price action analysis of Bank Nifty futures using 1 minute candlestick chart. Today is 1st of December 2015. We are getting towards the end of the year, just a few days left in this year. The chart that you see here is basically I have an issue with my charting application today, the data feed that is coming in. I did some settings or try to do something different and it screwed up all the data. That's why I'm not bringing up Ninja Trader chart and it shows you the real-time data feeding in. Instead, what I've done here is capture the snapshot and put some annotations uh, on this image which I captured once I was already into the trade, and then put some explanations that will help you understand what happened today and how you could have traded this bar by bar price action and profited from it, right? So let's begin. Again, one more interesting day. This dark blue line is yesterday's high, right? The price opened within yesterday's range. Bulls tried to push the prices up, and the open and low is same, so bulls control this bar at least to begin with. But what you see next is it failed to get past yesterday's high, so bears were ready. They were not going to allow bulls to get past yesterday's high and continue with the bull trend. Instead, what we see here is that bullishness was stalled, or bears sold here in this region or area, right? And that's why you see a big tail here. Okay, so the first bar you see gap up, but still within yesterday's range, and bears creating a tail on top. So it closed somewhere in the middle. So we don't take any action. But as I mentioned, there are trades on every single bar. Those who know how to trade the price action, they are already in this trade. As you can see, this tail is created. Some of the aggressive bears are already into the short trade and they're going to push the prices down. Okay, you see bar 2, there is this gap between this bar 1 close and bar 2 open. What do you see? Gap. What is it telling you? Bears are in control. They are in so hurry that they do not want to let bulls get any control or allow them to take any charge, right? They want to keep pushing the prices down from the word go, and that's why you see gap. They sold the close of this bar and they're showing the emergency. Of course, they were held back at this level, which is where the bulls started buying, right? So there is some support that is being provided. So what we see is bears selling in here, bulls protecting here. So, okay, we don't have a clear idea where the price is going at this point of time, but we know that uh, bears are pushing the prices down. Next bar is important because that is going to tell you who's going to get the control. You see this bar with tail on top and tail on bottom. So if you just rely on candlesticks, it's a doji bar and you want to avoid the trading range bars and all that. Okay, but if you really understand price action analysis, there's a context being built, right? You know that bears are trying to take the control. If bulls stand any chance from here on, they must own this bar and push the prices up. What happened instead is this is a weak bar, right? So bears did not allow any control for these bulls, right? They kept the prices where it opened, and that's why you see immediately there's a gap between this close and this open. Again, sense of urgency is being shown by bears, right? So it opened and it never went up a tick above that open and kept pushing the prices down, and it went below the moving average. It closed below it. So it's a clue that bears are strong. They are going to own the price for at least a while. That's what they're stating here, and that's what you need to be able to read and set yourself up to get into this move. Okay, do we see anything, any trades here based on the price action setups that I've been discussing? Not as of now, at least based on the low risk setups that we want to get into. Right? If you are a high risk trader, you could get into some of the setups like, you know that bears are controlling this move now. You could sell the close of this bar. Some already sold it here or during this bar, betting on the continuation of this bear move, right? Now what do you see next? Now this is the bullish bar. Some bulls uh, basically bought in here, and how are they going to profit from this move? Because they must have a plan wherein they knew that if the prices don't continue to go up, it is going to fall down. How far they are going to they are willing to let it go. So what you see here is an important element in price action analysis. After this bear breakout of the EMA, you see this weak follow through, right? So those bulls that were in here are scaling in. It's not just that the bulls are scaling in, the bears are taking profits as well. But important point is bulls are scaling in. That's why you see this bear pressure being applied, but it is soaked. Again, this bar. So these tails at the bottom are telling you that bulls are buying. So those bulls who bought it here are buying here and scaling it at this moving average around this level. And what you see next is that that's why you see after this bar closed, they did not allow this price to go down any further. They are maintaining the higher lows, and there's a bull breakout. There's a bull breakout. There is a follow through, a weak one, right? So someone who bought in here, the close of this bar, okay, someone who bought in here, uh, the level is going to be different. But someone who bought in here after the close of this bar, betting on the bullishness, right? What is this guy doing is he is going to scale in here. So this and this, that's the somewhere around this area is the average price, average entry, right? So he's going to be profitable on this entry, but he's going to be able to get out and break even, right? And that's where you need to see which side is doing what, right? If the bears were to continue, that they cannot allow the price to go past this area, because one, this is an area where the gap was created, right? Second, the bulls should be getting out and they should be disappointed and giving up, right? That's why I have mentioned here. This is the third important point here in today's story, when the scaling bulls gave up as they locked in profits or got out at break even, and bears knew it, and that's why you see a strong bear bar which closed at its low. You can't see it here in the image, but they sold the high of this bar and they pushed the prices down and it closed strong. Then you see next is this follow through. Uh, the bar closed bearish. One more attempt by the bulls to poke above, but bears sold the high of this bar. Now they are in total control, right? So these bulls have already given up, and bears know it, and they're going to push the prices down, right? So you could have gone short here, right? Looking at the story that I built up, or you could go short at the close of this bar or below this bar, right? That's one way to get into this trade, into the short trade, right? Those who sold here have already made some profit, or they're adding in here and they're going to continue riding the price down, right? What do you see next? This bar broke the moving average, close below it. Okay, now these bulls who are trying to support the price around the moving average area, and then you see some weak follow through, right? There's a breakout again, but it is being held this resistance level, right? Second attempt, then it is a failure of the breakout above the EMA. Then there's another attempt. What you see, this is one, two, and this is the third push up, right? Or you can see one, two, three pushes down as of now. One, you can see this is the second or third push up, and that's where you can clearly see that price is really weak at the moving average. The breakouts above the moving average are failing multiple times. That is a clue that price is going to now continue this bear move, right? That's where we get into this short trade below this bar, right? You can see this entry triggering the short, right? This is a triangle pattern that we typically observe a lot of times during the first 30 minutes or so, right? And the entry trigger, the stop is basically 10 points. Risk is being taken here, and target is 30 points from the entry, right? The price uh, closed good enough on the entry bar. There's a good, nice follow through, two consecutive bars giving the bear move, right? I have not captured the further move because of the charting issues, but the price did hit my profit target of 30 points on this move. Now, volatility of today is not that great. You can see the y-axis scale is just 5 points, so it's not really moving that fast. The range is a bit lower because of low volatility, right? So you could decide to get in lower. You could adjust your stop to 5 points instead of 10 points, and then get out at 20 points. It's up to you. Uh, or you could just stick with 10 points risk and 30 points target, right? So for conservative weighted traders, there was one trade, which is this short trade here, which gave you 30 points. For aggressive traders, there were multiple trades that I talked about, right? Someone who uses limit orders, they could scale in and be profitable, but that is really for advanced traders. If you were just beginning, stick to the simple trades that I'm pointing out day in, day out, right? For a simple conservative trader, you could have basically initiated short here, right? That was one opportunity that I did not point out here, and at least not mentioned here on the chart. This was the simplest one. That's why I'm putting up here for the illustration. But there was one opportunity here, right? So you could have definitely made more than 30 points or so, or you could have made two trades of 20 points each, right? These multiple possibilities that you can see here. So it was possible to make at least 30 points in today's 30 minutes of price action trading. Okay, I hope it helped. Thank you for watching.